In September 2013, the Monetary Authority of Singapore amended credit card and unsecured credit rules aimed at improving lending practices by financial institutions and enabling individuals to make better borrowing decisions. One of the key changes is to require financial institutions to review a borrower's total debt and credit limits with all financial institutions before granting a new credit card or unsecured credit facility, or increasing the credit limit on such facilities. Checks must be repeated if a financial institution is alerted about borrowers' potential debt problems, for instance, by family members or credit counselors. This is to enable a more realistic assessment of an individual's borrowing capacity. In addition, financial institutions will be required to obtain a borrower's express consent for the amount of each credit limit increase. This will ensure that credit limit increases are not extended to borrowers unless they agree to such increases. MAS introduced a limit on an individual's total unsecured debt across financial institutions. This new limit will come into effect in June 2015. Financial institutions will suspend the borrower's accounts if the borrower's aggregate unsecured debt exceeds his annual income for 3 months or more, based on their respective income records. This rule does not apply to borrowers with an annual income of at least $120,000 or net personal assets exceeding $2 million. MAS will exempt purposeful or needs-based nature of education, business, medical, and renovation loans from this rule. The impact: borrowers are not allowed to obtain new credit cards or charge cards or unsecured credit facilities. They will also not be able to obtain any credit limit increases on existing credit cards and unsecured credit facilities. They will also not be allowed to charge new amounts to their existing credit cards and unsecured credit facilities. This rule targets heavy borrowers. It discourages prolonged reliance on unsecured credit and slow debt accumulation by borrowers who have already incurred significant unsecured debt. What if my total unsecured debt has already exceeded my annual income since November 2013? Can I still use my credit card? Yes. That is, if your aggregate unsecured debt as at November 2013 falls between 12 and 16 months of your income, you will have up to 1st of June 2017 to adjust down your debt before the financial institutions suspend your credit cards and unsecured facilities. If your aggregate unsecured debt as at November 2013 exceeds 16 months of your income, you will have up to 1st of June 2019 to adjust down your debt before the financial institutions suspend your credit cards and unsecured facilities. This means that before 1st of June 2017 or 1st of June 2019, financial institutions need not suspend the credit cards or charge cards and unsecured credit facilities of such a borrower. But you must have your debt level computed by 1st of June 2015 and enter into a repayment plan agreed with each financial institution to qualify for the extended timeline. For example, a borrower owed $10,000 each to 5 banks as at November 2013, and a total debt of $50,000 is equal to 12 months of his income. His repayment plan with each of the 5 banks should reduce his unsecured debt with each bank to less than $10,000 by 1st of June 2017, assuming he did not transfer any debt from one financial institution to another. Borrowers can refinance their existing debts with other financial institutions. Fresh credit is strictly not allowed. The financial institutions have the discretion to lift the suspension and exceed the per financial institution regulatory credit limit. This will enable borrowers to benefit from refinancing debt at lower interest rates by transferring debts from one financial institution to another. Also from 1st June 2015, if a borrower is 60 days or more past due on any credit card or unsecured facility issued by the bank, the borrower is not allowed any further unsecured credit. Other banks will also not be allowed to issue new credit cards or unsecured credit facilities or increase the credit limit for this borrower. MAS will exempt purposeful or needs-based loans such as education, business, medical, and renovation from this rule. This rule is to prevent debt from snowballing for borrowers who have problems even repaying the existing debt. Can I still use my credit card if I did not pay my minimum balance for more than 60 days? Yes, only the financial institution with which the debt is 60 days or more past due is required to suspend your credit lines. You can still use the credit cards issued by other financial institutions, but they cannot issue new credit cards or unsecured credit facilities or increase your credit limit. Do I have to repay all outstanding balance owed before I can use my credit facilities again? No, the financial institution can reinstate the suspended credit lines when you repay all the minimum payments due and after conducting fresh income and credit bureau checks. From 1st of June 2015, borrowers who have not paid their previous month's credit card bill and revolving unsecured credit facilities in full will receive a disclosure statement. This disclosure statement discloses to borrowers the total amount and time needed to fully pay off their debts if they only pay the minimum amount each month. It will also disclose the total amount of debt that will accumulate by the end of 6 months if they make no payment in the next 6 months. This is to make borrowing costs more apparent for the borrower to understand how his debt will accumulate if debts are not paid in full.